This year 2025 budget should be the best one of all. I really believe that the government will not want to give up on the economy's growth because they have to strike when the iron is hot. Welcome back to this channel. This is Aakash. I'm the host of Business Nut Podcast, and what you're watching is Business Nut Podcast Stock Market Series. This series is particularly focused on the stock market front, where I reveal all of my strategies, all of my research to help you guys with your stock market research, and you can use them for your investments, for your trades and everything that you want to do. So I don't want to gatekeep any sort of information. I reveal whatever that I'm doing to help you guys with whatever you're doing. If you're new to the channel, please let me give you some introduction about this podcast that I'm doing. It's the Business Nut Podcast that I host, where I invite various entrepreneurs, various professionals from different parts of the world, from the relevant fields, who are the best in their fields, and they share their stories of how they've built their business to help you guys build your business. I invite guests who I really like, who I really admire, and I like their work that they're doing, and I feel like they could add a lot of value to you. So please do me a small favor, hit that subscribe button, leave a comment, and let me know who you want to see on this podcast next. Now, this series is particularly focused on the stock market, so if you are not from the stock markets, feel free to skip this one. For the stock market community, without any further ado, let's get started. Now, it's been a while since I made a video on the stock markets, and let me give you why. So if you look at the markets in the last 2 months, like November, December that I'm talking about, there wasn't any major thing that happened apart from some dips that we saw in November, and then it came up a little bit, and then FI started selling. There's nothing major that happened in the market. So net the index has not gone up. There was a major opportunity in November end where I put in some money, but there are different factors going on in the market. We'll touch up on that. I'm also going to touch up on a few sectors that I shared earlier. What are the updates about that? The reason why I was quiet, when we have these moments like this, like these 2-3 months of stock market dips, where everything seems uncertain, there will be buying opportunities 100% if you're a long-term investor. But if you're like looking for a short window, just a short window of 3-4-5 months where you can make quick 20-30-40% off returns, that's not the market that we're in right now. Like, this is a long-term investing market. If you're a long-term investor, like, this is a really good market. But if you're looking for short-term trades, like, there could be some hiccups here and there, which is why I was quiet. Like, I was sitting out the entire time. I was just watching the market. I didn't do anything. While most research guys were jumping here and there, like, buy this, buy that. This is the best time. Like, no, we'll have a lot of opportunities. I still say that this is the best time to buy if you're a long-term investor, because a lot of stocks have crashed. But net, I would say that I'm optimistic, but I'm also cautious. So if I didn't have any sort of ideas to share, like, it would be stupid for me to just make videos just for views, and then you guys would make decisions around that, and then like it's really not authentic. Whatever ideas that I was having, like, I was trying to remind everyone that this is what's causing the current market to correct. So here and there I was sharing my ideas on Twitter and LinkedIn. If you guys haven't checked it out, like, go check out my articles on LinkedIn. I'm also very active on Twitter, X, so give me a follow there. There are 2 major events happening in the market right now, like 2, that's going to cause a lot of damage, uncertainty in the market. So the first one is, like, we all know Donald Trump is coming back. Imagine the consequences for India. Donald Trump is known to be very ruthless when it comes to business, the stock markets. He's pro-America. He wants America to flourish regardless of the consequences of other nations. What we're entering is a completely new era of investing. I don't understand diplomacy. I don't understand politics. But to give you some sort of surface level ideas that I'm thinking of, historically, Donald Trump is known as the tariff president. So if he doesn't like any sort of countries that he thinks that they're being unfair, like, he's going to hit them with sanctions, hit them with tariffs. That's going to cause ripple effects to the markets. Now, when we look at Indian markets, there are some sectors that seem like they'll be affected. If you look at this first term, Donald Trump was attacking the auto companies. When I say auto companies, like, I mean two-wheeler auto companies. He was attacking that India was charging 100% tariffs on Harley Davidson bikes. Right, and then he said that the trade might stop, and that kind of seems logical, because India had special status with the US when it comes to trade, and that was removed. Now, I don't know what's going to happen now. I don't know his policies in the future. This is a very difficult period for two-wheeler auto companies, and I think that's the reason that's one of the reasons these auto companies are crashing, like Bajaj Auto. Let me just pull that up. So right now Bajaj Auto is trading at 8,700 or something. It came down from 12,600. So that's a big crash for such a huge company, and we are predicting it to crash further. And that's why I say that this is a whole different world that we're living in post Donald Trump's election. We should be very careful when it comes to these kind of sectors. You should look at historical data. You should look at are the ripple effects that could cause because of any sort of changes in the policies. I'm not that smart when it comes to understanding policies, but I look at headlines that we see here and there, so you can correlate those ideas and make your general assumption that this could be impacted. Now, the second thing, wow, like this is a really good one, because I really believe that this is the driving force of the next bull rally for the market. This is a really big budget that we have. Let's establish the current state. You saw the GDP growth, right? India's GDP growth hit a 4-year low. I think the government has not done a good job in the current year, because I really believe that India was, 2 years ago, India was thriving, like all the sectors, like even the stock market was not doing well. The GDP numbers, all the numbers were doing good, like all the numbers reflected growth in India, and we saw the market rally in 2023, 2024. Everything was a direct reflection of economic growing. Everything was a clear reflection of that. Suddenly everything stopped, and like I'm still trying to understand what happened, because I think the new government came in. Maybe that's a different angle to play, but the growth stopped while US, that is struggling economically, they have the highest debt in the world, their markets are up. Now there's a lot of pressure on the government because they have to deliver on the fiscal deficit side. So if you don't understand fiscal deficit, let me give you some quick explanation around this. Let's say you have your business, right? And like that business makes an income of 100 rupees. So you have a net income of 100 rupees, like you spend, let's say 120 rupees to run that business. So if you count your net income minus your expense, you're running in like minus 20 territory. So that's a deficit. You're spending 20 rupees to run your business. So that's a loss making business, obviously. Imagine the same thing at like a national scale. The government makes money through taxes, through different avenues like long-term capital gains tax, security transaction tax, GST, income tax. And if they're spending on capex like infrastructure, railways, airports, solar projects, welfare schemes, and if it's a deficit, they have to maintain that certain percentage of deficit as they have projected in the budget. And this is how inflation spreads, and like that's the same problem the US is struggling with. There's a little economic tweak that I've learned. If the fiscal deficit is a little bit higher than what was anticipated, that creates a short-term negative trend on the GDP growth. There's also different variables that go around, like how much are they going to spend now, what's going to happen in the international markets. So you have to consider all of those things, because if the government is spending less, that means like the inflation is coming under control. That's a little bit of positive side of it. They have to spend it in a way that at least they sustain GDP growth. So let me give you a wild assumption that I have about the current budget. Post 2014, like there were a lot of budgets announced. Some are good, some are bad. This year, 2025 budget should be, and that's just my understanding, should be the best one of all. I really believe that the government will not want to give up on the economy's growth, because they have to strike when the iron is hot. Like there's no other option that they have. They have to maintain this growth because it takes a lot of effort, a lot of diplomacy, a lot of good factors internationally, domestically, from industries, to bring all these industries together to get capex from them, for investors, for everything. It takes a lot of effort, and if they don't capitalize on this, they're missing out actually, because the time is right. Like that's what I feel, that's what I deeply want for the country. And yeah, like this is just my assumption. Let me give you a second challenge that the government is facing. Like private capex is down. Like this is not a new phenomenon. Like private capex has only showed up when they have to do expansion. Like this is what the RBI says it as well. Like private capex revival is not seen. So the government has to focus on this. They have to bring back all those leaders again. They have to set up meetings. They have to give them promises and actually show results. Now the other thing that is causing this crashes and all these problems is like higher taxes. Think of it logically, like higher taxes mean that there's less disposable income. There's less disposable income, there's less spending. When there's less spending, the government collects very few taxes, and then the net revenue is down. So it's like a flywheel. The government has to spend more, the government has to reduce taxes, and like keep that chain running. There's hope in this budget about lower taxes. I hope that the government takes it seriously. Now, the other area that the government is struggling with is like the welfare schemes. I really believe that there are some group of people in India that really need help from the government. They need assistance. They are struggling financially. They don't even have a roof over their head. Like, they deserve like welfare assistance from the government. I hope that changes as well. The last one, like, I think this is a major one, like unemployment crisis. Like, globally there's a lot of issues on the unemployment side, but I'm just going to focus on the Indian side because we're talking about Indian budget. Let me give you some backstory of unemployment challenges the government was like focusing on. So last year in May 2024, I put out a video saying that FMCG sector is going to gain out of this unemployment crisis. I was wrong there, like, because I expected the government to act sooner after they came to power, because there was a real issue on the unemployment side, but it took longer. And like for the last 8 or 9 months, FMCG sector has done poorly. 2 or 3 companies have done well, but apart from that, major companies have done poorly. Government will focus on unemployment crisis. They'll try to generate jobs through various schemes, because rural India is where a lot of these FMCG companies have major revenue from. When the rural India grows, FMCG companies sales numbers spike, and then we see healthy upswing in the stock prices of FMCG companies. More jobs, again, like it's the same thing. More jobs, more money, more spending, more taxes. But somewhere in that circle right now, we see some sort of leakages. The government needs to figure out where that leakage is and fix it. And when we look at all things from a bird's eye view, when we look at all these 5 challenges from a bird's eye view, we can correlate many ideas. We can correlate pieces of which sector is going to do well, which sector is struggling, which sector will continue to struggle, and which sector will grow. So your job as an investor should be, okay, let's point out these things. I'm going to keep tabs on these 5 sectors. Here's what I'm doing as well. I'm noting down these 5 sectors. I'm going to write down notes. So this is one sector. This is the pain point of this sector. This is the solution required for this thing. There'll be some sort of solution presented in the budget. Most of these stocks are waiting for some hope. The stock prices have corrected so much that like it seems at a throwaway price. A lot of these FMCG companies are available at a throwaway price. Let's look at, I don't know, Coal India. Single P, 5P, then there's PFC, 6P, REC, 8P. So you can see a lot of these companies are available at a dirt cheap valuation. ITC is another one, 27P. Like, this is the most cash rich FMCG company, 3% dividend yield. Quick disclaimer, I'm not advising anyone to invest in any of these companies. I may have positions in some of the stocks, but this is just my understanding of the stock market. Now, around November, December, I shared a few videos around which sectors that I like in the current market, and that holds true even in this market. I continue to believe these 5 sectors will continue to grow in the long run despite the challenges that we have in the market. These sectors, like most of them are hated in the market. When I talked about IT in April 2024, like everyone was hating on IT. Oh, the demand is bad, like everything is bad. Infosys the management reduced their guidance and the stock crashed 7-8%, and then there was GST issue with the company, and then everyone went quiet. Now everyone is bullish on IT. You have to be very careful of who you are listening to, who you are learning from, because most people in the stock market are just bandwagon people. They say they are long-term investors, but they're just looking for a quick short-term trade. And I love short-term trades as well. I do it myself. You have to be very clear what your approach is with the current one. When I say IT, I'm in it for the long run. The demand that the companies are receiving from the AI services is outstanding. Look at what Nvidia is doing. Look at what a lot of these AI players are doing with their products. Most of these companies that will buy all that hardware have been affiliated with Indian IT companies, and they'll need some assistance to integrate those products, those services into their current systems. So who do you think who benefits out of this? I really think that Indian IT companies will benefit out of it, because they are the ones implementing those systems. They are the accountability partners. Nvidia released a PDF recently, and they have clearly mentioned who are their partners, who are their system integrators: Infosys, TCS, Tech Mahindra, Wipro. If I say I like this company now, I'm hoping in 1 or 2 years that company or that sector will do well. One area this is just my prediction, is metals. Why? Because China is trying to revive their economy. US is trying to revive their economy. and they're both going to spend a lot of money on infrastructure. We are also in a global commodity bull run. So a lot of these metal companies, a lot of these mining companies, there's another reason. China is shutting down a lot of factories because they have to be ESG compliant. And I think Indian companies that are focused on the export side, a lot of these metal companies export their products, and a lot of these companies focus on domestic products. They're both going to do well. I'm just talking about what's going to drive the demand. So Indian infrastructure demand is going to drive the domestic market, and the global demand that we're going to see from infra by Chinese companies and the Chinese overall spending and the US spending is going to be hands down the next big driver for these metal companies. And I think that's happening. We're in the early stages. It'll happen. We might suddenly see some announcement. This is another sector that the market hates, which is OMCs. Everyone is chasing the next green, the next renewables, but we cannot forget that Indian two-wheeler demand, four-wheeler demand is still heavily reliant on like petrol and diesel cars. And there are only 2 or 3 listed companies. They're available at 6 or 7 dividend yield, by the way. If you just look up OMCs, like most will show you 4 or 5% of dividend yield. The government has changed the management in PSU companies. Most of them are profitable. Most of them are run by professionals now. They might take a little bit of hit on the inventory side. Their margins are improving. The marketing costs have come down. So look at OMCs. I really believe that in 2025 OMCs will come back. The next one is PSU banks. So they've cleaned up NPAs. They've cleaned up a lot of different things. Banking is a commodity business. When I say commodity business, it's not like private companies give you special sort of loans. PSU companies give you loans, private companies give you loans. Now it's a matter of, earlier it used to be who manages well. Now everything is clean, everything is run by the same standards. Now it's all a matter of like who does it better, like who manages everything well. Their CASA ratio is much higher compared to private banks. Although a few private companies are doing really well, I'm not saying they don't, but PSU banks are very underrated in this market. This is the recent number that Bank of Baroda came out with. They reported 11.74% growth of global business. Their domestic growth was 11.76. Their domestic retail was 19.48, close to 20%. One more sector. I have one more sector, which is power financiers. Because power is one sector that is still very underrated. Like we are going to see massive demand in power sector. A lot of green projects will be announced, and like there are only a handful PSU companies listed in that basket. You can look at all these major guys who run all these biggest funds say that like power theme, it's a better bet in the BFSI space. CFC, there's REC, which I already mentioned earlier. All these companies are phenomenally well run, that they are extremely attractive in terms of valuation. I'm bullish on all these companies, so I really hope that power financiers start a new leg of the bull run. I hope you found value from this video. I hope you learned something about investing. I hope you found at least like 1 minute of value from this video. If you did, please do me a small favor, hit that subscribe button, leave a comment, let me know what you found useful from this video, and please share your feedback, how I can improve, so that I can understand what you guys want and I can talk more about it. Alright, so that's the end of this video. I hope everything goes well in the market, and I'll see you soon in the next one. Until next time, peace.